It's Memorial Day. It's May 26, 2025. Happy Memorial's Day, everyone. It's Dwyer. Um, Always 1776.com. Also, money1776.com. Nothing I say in this video should be construed to be investment advice. Remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Please study, do your own due diligence, hire your own advisors. Now, this video is just one man's opinion. Most people I run into disagree with me. People I trust, who I follow. Famed investor Jim Rogers, for example, has sold, according to him, most of his stock holdings. Right? Some investors, Michael Burry, who seem committed to stocks like Alibaba, have either reduced the position or has completely liquidated the position. Right? Just understand, the world is changing fast. I don't believe this is being properly reported. So this video is one man's opinion. I have no insider knowledge. My own bias is toward being an outsider. I'm someone who feels nervous when I think that I am blindly following any group. Right, so a few episodes ago of this high-risk series, I talked about the stock Google, right? Alphabet, the parent company. I'm still buying Alphabet, right? I feel that it's cheaply priced on a price earnings multiple. I feel they're doing a lot of great things. I get the feeling the antitrust litigation will be solved in time, either through settlements, spin-offs, things that will deliver value to shareholders. Other things that I like right now, hard assets, right? Bitcoin, a company holding Bitcoin, using leverage to do so, strategy, gold, silver. There's an ETF I like. It's the ARKVF fund that you can only get through SoFi, and well, I have it through SoFi. I guess there are other ways to get it, but let's just say it's not, because it's a closed fund. It's not widely available on brokerage accounts. The reason I like ARKVF is because they're invested in OpenAI, Anthropic, Robinhood, SpaceX, XAI, right? I feel that AI is a game changer. It's one of the few that have happened in my life. Cryptocurrencies are another. The internet is another. I believe that AI greatly reduces the cost of entry into profitable markets. This video, for example, is being done with an AI-generated background that took a few seconds to create, right? Just understand, with AI, everyone has access to graphics. With the internet, everyone has access to global distribution or near global distribution. Um, I just feel that AI is going to be extremely disruptive once we understand the jobs that it replaces, including my job. Right now, we have a status quo where people are blindly investing into stock indexes passively. The algorithms are going to give you a lot of other opportunities, right? I believe a lot of people are going to de-link from investing in an S&P 500 index, and are going to start migrating to AI generated algorithms. And of course, AI is learning exponentially. I myself am astonished by how much more I can do with AI now than I could just a few months ago. Now, let's talk about what's important. Um, you know, what I want people to do is to have metrics they use, they can trust, to give them an accurate gauge on the world, right? I find most of these shows where they talk economics are too long winded, right? Some of my videos, quite frankly, are too long winded. Japan's bond market should concern all of us, right? The yields on the long debt are jumping. There's very little that the establishment can do to stop that, right? Obviously, the world feels that there's a debt overhang, and while people won't openly say, I'm losing faith in this economy, I'm not going to invest in their bonds, the bond market is telling us that that's exactly what's happening, right? So here in the United States, understand it's big news that the 30-year bond, U.S. bond, is now above 5%. I personally feel, and I could easily be wrong, I personally feel that it's going to go much higher, because I feel that people view our government as inconsistent and not fully able to handle the situation. Trump's big, beautiful bill, if you believe people like Thomas Massie, right? That's a name you need to remember. Thomas Massie, Massie. Please Google him. He's one of the few in Congress right now who are trying to put a band-aid on the bleeding, right? Trying to stop the bleeding. If you believe Thomas Massie, Trump's big, beautiful bill is going to add trillions of dollars, trillions, with a T, to our national debt, right? Understand, the debt figures themselves are fictitious because they assume that we're going to be able to deliver on our Social Security promises, our Medicaid promises, etc. We might not be able to. So understand, the political establishment has us looking at President Trump as if he has special powers that can bend the rules of supply and demand in economics. And it also has us looking at Chairman Powell. We should be looking at Mr. Market, right? Understand, the market isn't waiting around trying to hear from Trump, who has declared bankruptcy in the past, Trump-related businesses, or from Powell, who was born on third base, right? Understand, too, I'm a fan of Scott Bessent's. Scott Bessent has, what, less than half a year experience as Treasury Secretary? Folks, what really matters is what the market is doing, right? I'm tired of hearing what the market's thinking and sentiment and all this other stuff. No, look at what the market's doing. That's what we know. The 30-year is over 5% right now. The costs of debt are rising, right? So underwater leveraged markets, think public pensions, are going to struggle, right? Housing, it's going to struggle. Cars, the car market's going to struggle, right? Let's also thank the folks who stepped in. We had an absolutely ridiculous law here in California where we were going to sunset internal combustion engine cars. I can think of nothing that would set back working class and poor people more than telling them that If they're going to buy a new car, it has to be a Tesla. It has to be an EV. Folks, that's ridiculous. Right? Understand, we still have battery problems in those vehicles. Right? The batteries are conking out. We haven't solved that. Understand what would have happened as old internal combustion engine cars die out and people needed new cars. Right? They wouldn't be able to jump into the world of EVs because they're too expensive. The infrastructure is not there. Right? I live 1 block away from an EV charging station. It's packed most of the time because even here in West San Jose, Silicon Valley, there aren't enough of them built to handle a conversion over to EVs, a government mandated conversion over to EVs. So what would happen is people would be unable to afford cars, and they would have to then instead view autos as a service. Right? They would have to get to work. Right? You're a working class person. You need to get to your job. You can't afford an EV. It's hard to get financing. You're the demographic that needs financing. Right? You weren't planning on buying a car using cash. Right? So understand, to get to your work address, given the paucity of EV charging stations, you're going to have to hire Uber. You're going to have to jump boldly into the world of autonomous driving vehicles, right? Because there's going to be a split. Paying a driver to drive you to work is going to be too expensive, right? Let me point out, too, I think Uber is a promising stock right now. Let's go further. The government has to roll over trillions of dollars of debt. I've seen different numbers, between $8 and $11 trillion of debt. Sooner or later, we're going to get back to our regular strategy of inflation. Now, understand what that means. That means that the economy is going to split in two. You're going to have the dollar-based fiat economy, right, where the value of your money is evaporating, where you're paying more for the Happy Meal at McDonald's, where discount places suddenly are costing you, if you get a soda and fries, $16 and up. Then you're going to have a different economy. You're going to have, we'll call it here, the gold/Bitcoin economy, where, believe it or not, prices are dropping, right? Where that one Bitcoin can buy more and more over time because it's doing better than holding value against the dwindling dollar. But let me say this, inflation, which will hide losses. In other words, inflation's happening, you're looking at your house, you're thinking to yourself, oh, gee, my house isn't losing that much value, right? In fact, I'm paying less on my 30-year mortgage, the one I got before all of this, than the rate of inflation, perhaps, right? But the real purchasing price of your home, right, measured against the median income of where you live, will be dropping. Well, let me just say, eventually, inflation is going to hurt creditors, right? It's going to hurt the banks that bought bonds at lower rates in the past, right? I'm hearing B of A is holding a lot of bonds that only pay out at 1%, right? It's going to hurt banks who lent you money and would have made a profit if the interest rate stayed within a certain range. And now, of course, you have inflation distorting things. So, folks, banks are going to stop lending to working class potential customers. You're going to have a credit collapse. That's what happens when banks can no longer predict which loans will make a profit because the currency is being debased. So there's going to be an inflow into risk-off assets. Now, we all know gold is a risk-off asset. I've been having a dialogue here in these high-risk videos arguing that Bitcoin is a risk-off asset. While, of course, I've been having that dialogue here, Bitcoin now is up over $105,000 a coin, right? Let me say this too. As governments come under pressure, as the standard of living of their citizens drop, they will need to justify their existence while finding ways of boosting national pride. So you're going to have more skirmishes like you just had between Pakistan and India, right? You're going to have more wars threatened. You're going to have more immigrant scapegoating. There's a major party in Sweden right now that wants to stop all immigration into Sweden. Right? So I believe it's important, given history. Think about World War I, how alliances led to that war and led to its escalation. You know, the United States, in my opinion, and other countries are going to have to start thinking about pulling out of these military alliances. Right, folks? Nuclear power is widespread. You can't be a member of an alliance where some extremist group gains control of one of the countries, and then that country goes off and gets themselves in a war. Right? Then there's pressure within the alliance on whether the other members are going to honor their obligation to help the country that's at war militarily. And of course, different countries are going to have different reasons why they might want to be in the war in order to bolster their local polling, right? Because they're not delivering a bull market. So they have to convince people that the alliance is under siege when one member goes to war and that they need to be involved in the fight. Isn't that the discussion that's happening right now in terms of the Ukraine? Hasn't there in fact been a proxy war involving the United States, involving the United Kingdom, in terms of offering Ukraine, a country that realistically has already lost that war, military support? Right? Hasn't there been some looting of the Ukraine by countries seeking mineral rights in the Ukraine? Let me say too, price controls aren't going to work. That's just a short-term thing that doesn't work long-term. So we just had a presidential candidate talk about suing low-margin supermarkets. Right? Go in your supermarket. Look around. Ask yourself, what exactly is the margin that my supermarket is receiving on a loaf of bread? Right? Just understand, we just had a major presidential candidate talk about how they were going to sue supermarkets as part of some effort to reduce inflation. Right, folks? Moves like that are not going to work. Nor is bullying. Right, folks? Here in Northern California, as you can imagine, Apple is very powerful, very successful company. Right? You understand that the price break that you're getting on your iPhone is only possible because Apple is engaged in international arbitrage. Right? They're manufacturing the iPhone in places with cheaper labor costs. Then they are sharing some of the savings with you. Right now, folks, in my world, they should be given a medal for that. That's not the world we live in. In the world we live in, the President of the United States is threatening to levy a 20% or higher tariff on Apple if Apple doesn't move its manufacturing to the United States, which of course would be existential to the company. Right? Far fewer people are going to buy iPhones if the cost jumps 20, 25, 30%. Right? Apple, in fact, was moving its manufacturing to India, right? The most populated country on the planet, to take advantage of India's cheaper wage scale relative to the United States. Right? Well, just understand, that's not going to work. That's not going to accomplish anything other than to have a backlash in the business community at the absurdity of a president trying to levy tariffs against an individual company. Now, I suspect this is really part of a PR ploy by Trump to look like he is tough on established companies and that he is determined to bring manufacturing jobs back to the United States. Folks, that ship has already sailed. Has anyone been on X looking at the current state of robotics? Right? 2 years ago, I was looking at robots on X and or X's predecessor Twitter and other web places, and the robots looked robotic. Now you have robots that move like Fred Astaire. Understand, if in fact, manufacturing returns to the United States, a lot of the workers are going to be robots. You understand that. If you want to see a group disinterested in working in a factory, look at the teenager in your household. Right? Have a conversation with them. Say, hey, Joey, the local factory's hiring. They're offering benefits. Why don't you go down there and help manufacture widgets? At least apply for a job. If you want to look at a disinterested response, look at your teenager's response. It's going to be as disinterested as if you said, hey, they're deporting all these farm workers. Why don't you apply for a job picking lettuce? Right, folks? The will to work in those jobs is not there. Understand, importantly, the jobs themselves are not there. Right? Because the price levels currently allow American companies to manufacture overseas and then to import the products to the United States. Right? If the strategy you're hoping will reduce inflation is to bully companies like Apple, if that's your plan, to bring manufacturing back to the United States, then you don't have a plan. Let me also talk about tariffs for a moment. In some of these high risks going back months, I was talking about how tariffs are a tax. Right now, my subscriber base here is diverse. So many of you left comments, and I encourage people to read the comments to the earlier videos where they talked about, you know, how, we have to do something, right? How somehow tariffs were good for the country. Right, folks, understand the tariff idea is such a bad idea that you've had multiple big time, big time capitalist businesses here, businesses that are on the cutting edge of, giving you low prices, giving you broad selection. Amazon, Walmart. And they were threatening to list the cost of the tariffs in their prices. Right now, Jeff Bezos backed away. Right? Trump threatened Jeff Bezos, threatened Amazon, didn't like the idea of them listing how much it was costing you, the U.S. consumer, to pay a tariff. I thought we were supposed to be showing China how tough we were. I didn't think we were supposed to be showing our neighborhood how tough, the U.S. government is in taxing them. Well, now we have Walmart. And Walmart is openly talking about how tariffs are slowing down sales, how it's costing them, how they might start listing the price of the tariffs. Because the tariffs really are a tax on consumers. That's what tariffs are, folks. It's an import tax. Right, so you know the rest. The Trump administration is upset with Walmart. Folks, that's how bad the idea is. American businesses are threatening to further educate the American consumer on how much the tariffs are costing them in these fragile economic times. Now let me just talk about the vision I see of the future, and I'm just talking for myself. I'm not talking for some think tank or anything like that. As far as I'm concerned, the people watching this video will have to decide for themselves what's right and what's wrong. Right? At the end of the day, you should be managing your own investment portfolio. Here in the U.S., we're going to need to reconsider our minimum wage laws. They have to be rethought. Which California are we better off with? One where you own a McDonald's and then you're told by the federal government, who has less knowledge of the market than you, an active market participant, have, the owner of a business in the market. Right? The federal government was stepping in. Not the federal government. In California, the state government, Gavin Newsom, was stepping in and supporting bills where the government was mandating that McDonald's had to pay workers $20 an hour. Think about that. $20 an hour. Let me ask a basic question. How did that work out for you and your family if you would buy McDonald's for them once or twice a week? Right? How did that work out? Is your standard of living higher or lower as a result of McDonald's being ordered to pay $20 an hour for workers? Right, folks? Do you feel the restaurant business is stronger because because the state government here has mandated that fast food workers receive $20 an hour? Folks, McDonald's is a publicly traded company. They issue earnings reports I want people to go look at McDonald's earnings reports. Right, folks? They're under pressure. Right? The question communities have to start asking themselves is, do they want a McDonald's in their community? If McDonald's is losing profits because it has to pay workers in entry level jobs $20 an hour. Let me talk about some other things too. There's going to be an increasing use of robots. Now understand, that's when you see the robot. I'm not even talking about autonomous vehicles where you're in the car and the car is driving itself, but there's no one sitting in the driver's seat. Right, folks? I got news for you. You have autonomous trucks now. You have job cuts in the trucking sector of the economy. Right? Well, folks, as I mentioned earlier, robots now can move like Fred Astaire. You're going to have more and more companies using robots. We're going to become more and more acclimated to dealing with robots. The robots will displace many human workers and will make robot makers wealthier. Right? The net result of all of this is, as working class people get fired and as robot makers make more and more money, there's going to be more inequality. Let me say too that you're going to have smaller homes. People forget that 20 years ago there was a fad where people had what was called mansions. Right? I believe this new generation, the people in their 20s, they don't want a 2,500 square foot home. Right? It costs too much to upkeep. Just think of the utility costs. Right? Think of the opportunity costs. You're paying so much for your home that when disruptive technologies come out, right? OpenAI, XAI, right? Starlink, SpaceX, when they come out, your money's in your home. You don't have money to invest in cutting edge disruptive technologies that could 10x. There's an opportunity cost. So now Tesla, Boxable, they're in the housing business, right? They've updated manufactured homes, you know, different use of space. Boxable now has homes that are more than one floor. Um, all the bells and whistles, the electricity is set up so you can quickly connect to the internet. You can, be in a housing community that's close to downtown, which we're reimagining. Right? Understand, the work from home movement is now permanent. If I were 25 and if I could work from home and support myself, the only time I would be downtown, and I used to live in the Haight district in San Francisco, the only time I would be downtown would be to go clubbing or hitting restaurants, right? I'm not going to be packed in a mass transit train going to a 8:30 to 5:30, right? Let me point out that many people have made that decision. The infrastructure of some of our cities, out here, San Francisco, BART, the ridership's down. Right? What we were hearing in earlier generations, oh, I enjoy riding BART and stuff like that. This generation feels differently. People are now asking, wow, should I be paying for babysitting? Should I be paying for an au pair? Or could I be home and actually interface with my kids, right? Put the computer away for some parts of the day and then open the computer and work when the kids are at school. Let me do a cost analysis, right? Particularly in, California, where, the minimum wage is out of control. Um, am I costing myself money or saving myself money? Do I enjoy walking a few feet from bed to start my workday? Or would I prefer to actually take the bus to the train and then to be on the train with a bunch of strangers to go downtown? Do I want to make myself coffee from my kitchen, or do I want to grab a coffee from the Starbucks right next to where I work? Right, folks? I understand these big businesses, JP Morgan, Meta, are muscling workers and saying, you need to come to the office for X days a week. Right, folks? Long-term entrepreneurs are going to want your experience. And there's going to be an active market for working from home. Right? COVID had more fallout than any of us want to admit. Right? Let's continue. You're going to have a hollowing out of service professions. Right? I'm not kidding when I say AI is so powerful, right? Some AI systems have passed some state bar exams. Right? When attorneys are using AI to write portions of briefs, the writing's on the wall. Understand, too, being at a downtown law firm with a bunch of staff, right? Everybody has, a secretary, and then they're paralegals, they're different layers. That's inefficient compared to what's happening now, where, I can talk and my computer types for me. There's voice recognition. I don't need a secretary to immediately answer the phone. I can have answering services. I can receive things by voicemail. People can hit me up either by phone or by email, right? They're computerized schedule makers. Understand the traditional cost of having an attorney, of having a doctor. They're going to be reduced by AI, right? People are going to start, in fact, they have already, typing in the symptoms they have and then having AI give them possible health risks that they have, health conditions that they might have, things to talk with their doctor. In other words, no longer are you just going to the clinic automatically in a knee-jerk fashion, right? You're going to be using AI to do that. In general, barriers to entry are going to fall. I spent part of my career in law firm libraries, writing research memos, using books to research cases and stuff like that. Now, of course, the online law libraries, you have proprietary ones, you have free ones, allows that research to happen much faster, much cheaper for the end consumer. Right? Well, with AI, folks, the prices are going to continue to drop. Right? Think about the rent. The law firms I worked for in the past were paying for their office space. I used to work in the LA Law Building. You might remember that old series from the late 80s, right? 444 South Flower Street in Los Angeles, right? I'm telling you that the firm I worked for, the law library, took up a lot of space. Now, all of us carry the equivalent of that law library on our laptops. You can hit a button and your case is updated. It's shepherdized. You can easily tell if it's been overruled, explained, distinguished, reversed with just a few clicks. It's been that way for years. The technology is now accelerating where they can disintermediate the attorney. That's going to happen in field after field. Finally, let me say this. You have a situation right now where there's an open crisis in many major cities involving commercial real estate. Many of those buildings are going to come down, folks, because it's an older office building. It's not up to date in terms of having the electrical layout be completely conducive to, Wi-Fi and the internet. Just understand that it was built to be an office. You can't quickly convert those buildings to condos. The use case for those buildings has changed materially. Right? Just as the use case for mass transit has changed materially. We might actually get more manageable traffic, right? The use case, if you believe that you'll be able to just have your car drive around, pick up passengers all day, right? The whole concept behind the Tesla robotaxi. The use case for these expensive parking lots downtown in these big cities. Think about how much space they take. Think about how expensive they've been. That's changed. Right? Because now, theoretically, cars will be able to be on the road nonstop, service taxis, make you extra income to the extent that the average consumer is going to want to pay the money for a car. I suspect over time, you're going to have these fleets, right? Hertz is going to go from just being a rent-a-car service to owning a fleet of AVs, right? So understand, downtowns as we know it are going to change dramatically, right? So against this backdrop of a lot of change, expect new businesses to emerge, right? Autonomous vehicles are just the tip of the iceberg, right? Just expect, autonomous healthcare, autonomous legal care, right? Increased robotics. It's silly, quite frankly, to think that you can bully a multinational into manufacturing in the United States, and that the manufacturing in the United States is going to involve American workers and not American robots. Those are my thoughts. Let me hear yours in the comment section of this YouTube video. Thanks for stopping by.